What's going on, guys? We're going to talk about the SPY, SPY. So, coming off a really, really good last 4 or 5 days, I'm going to be looking at trading SPY this week for some options day trading. Guys, if you guys are interested in learning how to trade options, join my Discord. That link is down in the description box below. But what I kind of want to recap here on some good things that are happening with SPY and also some things that we need to, kind of take note of just in case this is some sort of bull trap. We want to be prepared for that and also be able to trade to the downside. So if we kind of just go and look at where we've been at the last 1, 2, 3, 4, 5 days, realistically, all of last week here, we did make one attempt to reclaim the 5 and 10 day moving average. Quickly lost that, however, finished green on the 24th, closing at a price over the 5 day moving average at around 395. So obviously, we know the rest of the story from 395 to closing at 415.26 and up another dollar after the session kind of finished off going into the long holiday weekend. So one thing that I do want to kind of take a note at, if I, not even including the after hours data, but if we take this 415.26 price, if we can confirm that any type of pullback, any type of dip, now mind you, we do have a little bit of a gap up here, not much, from 407 to around 408. If you want to go down to the body of the candle, 405 to 408. That's also going to be correlating with this 20-day moving average that is now starting to curl around. One thing that I do kind of want to point out here, and if I can make this just a little bit bigger, if you can see this 5 day moving average crossing over the 10 day, this is also very, very bullish. What we want to see here is get this 5 day back over the 20 and get the 10 over the 20. That'll look a lot better going into the coming days and weeks. Now, one level that I do kind of want to bring to everyone's attention, which is going to be a very, very key area and a very big level of significance, is this 50-day moving average here, the 50 SMA, which is sitting at around $426. You can see the last time that we lost that was last month on the 21st, and we went into a big sell cycle. So if there is some sort of short-term squeeze here going on in the markets on the SPY, the triple Qs, and various other stocks here, what we are going to need to see is a reclaim over the 50-day moving average, and then we're going to need to kind of consolidate sideways. This is not what we want to see, just 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 green days all up in a straight row. The faster we move higher, the harder we're going to come back down. I could even see us having, maybe a couple of inside bar days this week. I could see an initial push to this 418, 419 level, and then maybe we kind of back test into the 413, even, 410 area. That would be very, very bullish. But what we are looking at going into Tuesday and Wednesday is anything over 415, 416. We definitely want to take that for a nice little trade into 418.50, and over 418.50 is going to give us that initial push to 426. I think that's where they kind of want to tag us. They want to tag us at the 426. Then from there, maybe come back down and back test. If we cannot hold this channel level, which is sitting currently at around 413, we could see some more downside into the back into 400s. And obviously anything below 398 could test, the recent lows here of 380. It's still too early to say if the bottom is in. Just with that being said, it's because with stocks that are well under macro levels of supply, and those levels of supply that I'm talking about is the 50-day moving average as well as the 200-day moving average, which is currently sitting at $444. The longer that we build below there, these are just dead cat rallies until we get over those supply levels. And even when we do break above those supply levels, we need some consolidation, we need a back test, we need a bounce, and then we need to rally through those new highs once again. Once we can do that, I think maybe we can say that that was the bottom, going all the way back to that 380 price point that we had as of most recently. But a lot of people, especially traders, they try to time the bottom. That never truly works out, especially for traders saying, oh, well, we're coming off 5 green days here. I'm going to go ahead and put a put position here. Not saying that we do not open up lower, because we could do that. Just understand, for anyone that took puts over the weekend, what you want to do is on any type of red open or a gap down open, you want to sell into those profits. Okay, so make sure that you're selling into those profits. The last thing you want to have happen is open red or gap down into those profits from your put positions, have the SPY catch support and then kind of trap you and shake you out of that, and have a green position go to red. So just make sure on Tuesday that we're cleaning up those put positions. But if we gap up maybe into 418, 420, and then we cannot take out those initial highs within the first 2 hours of the market, I would be looking for some sort of back test. Again, I don't know if that's going to be a clear short position, because we need to see where that back test takes us. But if we do get that back test and then we hold, the next time we pass through those highs is definitely going to want when I'm going to want to get long into that 426. I hope this video kind of helped you guys. If you guys are interested in trading options, definitely join my Discord and subscribe to my YouTube channel. I would highly appreciate that. And I'll see you guys all in the next trading video.